Future of insurance will be digital. Distribution channels, products, underwriting technology, and business models will shift as technology attacks market inefficiencies and customer expectations evolve. Insurers need to innovate and adapt to digital distribution channels in order to be in business. Today, I'm speaking to Symes, CGO of Genasys. Welcome, Andre.
Hi, Rianet. Nice to see you.
The world is upside down. Some regions and countries are turning back to a slight version of normality. But rumors have it that in South Africa, many companies might only be returning back to office mid-2021. So although we had a flood of changes to work for a short while from home, it seems like more changes are happening because the time has been prolonged. What has the COVID pandemic revealed about the inefficiencies and efficiencies of existing operational IT systems?
Wow, that's quite a mouthful, but it's a great question. Look, I think that the challenge from a technology and a digital operational point of view, that there's always been a desire for organizations to digitize their operations and to move to that. All that COVID did was really give it a massive push. And you know, it's really a shame for the South African economy that obviously that there's this closure for so long. But on the flip side, it's keeping that push to technology going. The first thing that we saw when people started trying to move their operations from within their offices, sometimes their physical bricks and mortar offices, to work from home, was a massive surge in trying to get the right IT infrastructure in place. It isn't just about having a digital platform. You know, when you're putting someone out at the back of Roodepoort, or there's someone sitting in the wineries in Cape Town, things like last mile connectivity becomes quite a challenge. How do you connect to the internet? Do you have the right RDP? Do you have the right Citrix kind of connections? How do you get back into your infrastructure? That's the number one challenge. And with that comes a heap of security problems. You know, there's a lot of people that have been hacked, and the latest NTT reports have shown there's been a massive surge in data breaches in the last few months, particularly during COVID. And it was this work from home shift, because everybody had these platforms and systems built to keep people out. Now you put people outside there intentionally and they have to try and get back in again, and that creates a massive challenge. But that's just the cybersecurity side of it. Where the real problems came in, because software is a lot more difficult to change than getting a laptop and connecting it to your system from home, is that a lot of people genuinely believe that they had digital operational backends, so that they're stuck straight through digital processing. And a lot of them thought that they had this, but they just simply didn't. And it came to light that the right tooling wasn't in place when a claims assessor was not sitting at home and they had to go and assess a claim and they couldn't get there. Now what? You know, so what do you just Skype call with someone in a hazmat suit? So that's really where the gaps have been found. And fortunately, if you look, there's so many insurtechs around the world that you can actually plug all these little holes quite easily if you have the infrastructure to accommodate that.
Yeah. Do you believe it's the surge of the insurtechs? Is that now the time for insurtechs to rise and shine?
It's unfortunately, I hate being the chap that says it's a yes and a no answer. The reason being is that it absolutely has exposed where there is digital inefficiencies within the life cycle of a policy or in the administration of that straight through. And therefore, it's creating a situation where insurtechs need to flourish. On the flip side, though, is that the majority of the insurtechs aren't naturally cash positive. So they rely on investors to actually remain funded and to remain operational. I don't know if you saw, how the economies have tanked and investor confidence is at an all-time low. It has returned a little bit, particularly in the business-to-business software as a service side. So B2B is relatively okay. B2C has taken a massive hit, and it's also because it's relatively expensive. But the point being is that a lot of the insurtechs are not going to be around in 6 months' time. And that's a shame, because it's probably going to be a funding issue more than a requirement issue. So a lot of the guys that I've on the teams, or the people that can fill these gaps, are no longer going to be there because funds have gone into portfolio management and are just going to be putting funding on some of their more speculative kind of ventures. But absolutely, from a tech point of view, if you look at people, there's a company that we work with called Extract 360, which gives you full digital online Google Maps interfaces into accidents, to motor vehicle accidents. You can assess the situation remotely. That's the kind of tech that we need when our movements are restricted.
Do you believe that the coronavirus is going to change customers' habits, making it easier for them, easier and maybe more willing for them to transact with insurers remotely?
Yeah, absolutely, and that's exactly what I talked to when I said that the COVID pushed us to digital. Now it's up to the insurance companies and the tech providers that support them. Make no mistake, we are very much part of the responsibility here to create value that will pull, that will pull there. And where I always see the difference there is that the push has always been to get the clients acquired as seamlessly and quickly as possible. So there's been a lot of focus on your direct to consumer, your D2C or B2C angles, but now we have to shift it and make sure that there's value to bring it back and to keep these clients on board. The other big buying habits we're probably going to see is a massive distrust in insurers. Make no mistake about it that across the world, I know in South Africa there's some challenges regarding some of the business interruption claims, and a lot of the small, the SMEs are being really hard hit by that. Here in London, there's very similar ones going on. There are massive, massive claims currently against people like Hiscox and Royal Sun Alliance, also regarding exclusions and inclusions of their business interruption fees. And that, it kind of pivots to, for us as an insurance industry, we kind of have to take this to heart and go, where's our integrity? And also, where's our self-preservation? Because, I think we need to look at these SMEs that are going to go out of business. We as the insurance organizations, we've got contingency for this. We have reinsurance to a degree, and yes, we will take a not paying these claims. But at least the customers, our customers, will still be in business in 6 months' time. So, I think it'll be silly for us to view this as a mechanism that we can bankrupt our own clients by not supporting them when they need us most. And yes, we obviously have to be conscious of creating a precedent that we pay claims outside of mandate, but there needs to be a balance in very unique cases like this. So, sorry, to answer your question, there's going to be behavioral changes, buying behaviors, but the value is going to become on client retention rather than client acquisition.
Yes, the business interruption story, I think we can talk to for another hour. But it is exactly that. It's that fine balance between what do you pay and when do you pay, when you say it is the government that locked down the economy and not necessarily the virus. The conversation can go on for long. And I think as an industry, we are there to pay claims, but where's the balance? So how can insurance improve their competitive agility?
In what sense?
I think this virus will be changing. You mentioned the fact that we have to pay claims. Some companies will stay in business and others won't. Do you see some form of maybe merger, companies sticking together rather, and making sure that they are more competitive in a way that there's more that they can offer by sticking together? So how do we stay competitive in a market where everyone now wants the consumer's business in a direct front?
Well, I think I touched on that briefly in the previous point, is that client acquisition has always been the focus of the insurer, and whilst everybody always says that they want to retain client business, I don't always believe that the behavior matches that wording. And we actually have to understand where this comes from. It comes from unit economics from the shareholders. They look at the insurance companies and they go, right, what is our customer acquisition cost? And then they verse that over to, what is our lifetime value of that particular client? But depending on who your shareholder is, one weighs more than the other one. And I believe that, if we create an industry standard, or we stick together to a degree where we believe that the lifetime value of the client is more important to us than the customer acquisition, then I think people start aligning to actually looking after the policyholder rather than your shareholders.
Partnerships are key in your environment. The importance of partnerships have never been more important. Do you agree with that?
100%, and it's not just a business methodology or ethos that we have; it's a technical one that we stand by too. The a lot of my clients came to me and they asked for, some payment relief during COVID because they were harder hit. They were direct to consumer, and we absorbed that cost. We have to. We know that because we partners downstream, there will be an upside for us again. They'll remember who were the ones who supported them during the COVID crisis. But partnerships extend just beyond relationships. It's also about what you can actually do to value add to your customers itself or to our customers' customers. And we've been very focused on creating what we call an open ecosystem. So people are finally catching on to this idea that ecosystems are really important. We don't know what is going to be a value add to our clients tomorrow. We don't know if a meteorite is going to hit Johannesburg and they're going to have to build a meteorite cover or something. We don't know what's going to happen. But what we can do is put down frameworks and methodologies to cater for the unforeseen. And when you have things like really robust and comprehensive and rich APIs, you can plug in and plug out different modules or different technologies or insurtechs that your existing client base might need as and when they pivot. And to me, giving your customers that functionality is almost just, or it's actually more important than giving them a payment relief when they need it.
Change has now have to happen faster than it has ever happened before. Do you agree with that? Today you identify a need, tomorrow it has to be implemented.
Absolutely. And look, you can look at it right now. I mean, the COVID has been out for a couple of months, or the restrictions have been down for a couple of months now. How many companies have actually launched pandemic-specific insurance? Very few. I know Generic has, and I'm very excited about the fact that they did it using some of our tooling, and they did it very quickly. So you have to be able, again, to give your clients the ability to shift. The last thing you want to do is to be in a situation. So one of the people that I spoke to you in London, they're not a client of mine, but it's someone that I know quite well. They run a very, very big multi-million policies per annum travel insurance organization with about 80% of their business coming from travel insurance. Overnight, that business fell flat. But they had capacity to launch other products, but they just weren't able to do it with legacy platforms. So to me, their partners, their IT partners weren't partners, they were a vendor, and they couldn't pivot fast enough. So you have to be able to give your clients agility. As Charles Darwin said, or supposedly said, that you have to be able to adapt to survive.
Very, very, very true. Talk to me about Genasys quickly, your expansion to London and the importance still of your South African market.
Oh, look, South Africa is our home. That's where our heart is. And it's still by far the biggest portion of our business. It's where our key clients are. And the majority of our development is always going to be to look after our existing client base. Because as I just said, we care more about looking after our existing clients than getting new clients. But having said that, I'm currently based in London in not so hard lockdown anymore. I can go to the pub now again. Sorry for you, but it's been a great experience for us. And we've onboarded some clients. We've just gone through. I posted something on LinkedIn a couple of days ago. We've now delivered 4 different projects, all on time and on budget, in 4 different locations around the world, all during COVID. So we're quite excited about the fact that we can help people out to re-platform onto something agile like the Genasys platform, and we can do it remotely. So we've done Miami, New York, Auckland, and Dubai. And and we never set foot in country.
That is amazing. Wow. Well done.
Cool.
Your message to our readers, which is predominantly brokers.
Look, we are massive fans of the brokers. We support them. We've got solutions for the brokerages if they ever want to talk to us. They're feeling a little bit under the pressure. But I think the message to them is that brokers are probably some of the most resilient bunch of people in the world. And we've faced stuff like RDR, and we've made plans around that. And every time a new direct player comes to market, we pivot and we fix that as well. So the brokers, I've got a lot of empathy for them, and because a lot of our clients are brokers, we feel their pain. But they wouldn't be where they are if they weren't able to adapt and survive too. So I think the only message I can do is say to them is that they're valuable. That we need our brokers. I think brokers would really have helped a lot if they were more utilized in this BI space, as an example. The advice that they could give there. I know many stories about where brokers specifically told their SME clients to get some of these exclusions taken out, and they're now covered and they've been paid. So they're very valuable, and we should never underestimate or undervalue or the contribution that they make to our industry.
Thank you, Andre, for your positive ending to a great interview. I am convinced that this is not our last one. It was definitely not our first attempt as well. But thank you very much for I always thoroughly enjoy our conversations, and I feel quite positive after our chat. So let's do this again soon, and thank you very much for your time.
Thanks, Renette, and hopefully the next one will be in South Africa.
Yes, at a bar.
Yeah, absolutely. See you then.
Thank you. Thanks, Andre. Bye.
Bye.